Hello, everybody. This is Samantha from the law offices of Samantha Wolfe, and thank you so much for joining us for this month's virtual seminar. We're excited to have you here. Just so you know, we post all of our videos on our YouTube channel, and so you can access that by going directly to our website. We have a link to our YouTube channel, or you can always just look us up directly on YouTube by typing in the law offices of Samantha Wolfe, and you can check out all of our videos there. So we're doing some shorter videos in the next couple of months. So today we're going to talk about some life insurance. So I'm excited to do that. Let's go ahead and pull up our presentation and let's go ahead and start talking about life insurance and how it relates to your estate plan. So whenever we're trying to come up with topics for our virtual seminars, one of the things that we do is during client appointments, we may ask clients what topics they have questions about, what things we can expand on, because we always want to make sure that we're providing up-to-date information. And some of the questions that we have relate to the type of assets that clients have as part of their estate plan. So I'm not a financial advisor, so anything I talk about today is not going to be related to financial advice or what type of products or assets you should have. But I want to talk about it more in the context of how does life insurance fit into your overall estate plan, and how can you really use life insurance as part of your estate plan to help your beneficiaries. So that's what we're going to be focused on today. I always recommend that our clients, if they have a financial advisor and they have questions about life insurance, to talk to their advisor about it, or if they don't have a financial advisor, we can always give referrals or recommendations for those partners that we have in the community, and they can answer specific questions about life insurance policies. They can give illustrations, things like that that might be helpful. But let's talk about why estate planning matters. I can't help myself. Anytime I'm talking about any type of estate planning or aspect of estate planning, I always have to talk about why does it matter? And the key question is, how will your loved ones be financially impacted after you're gone, after you pass away? So estate planning just allows you to have peace of mind because you know your loved ones are going to be planned for, protected, provided for. Estate planning provides that smooth transition for your loved ones, and it also helps you prioritize you making the decision. Because like we've talked about in previous seminars, Pennsylvania is generous and kind enough to instill or implant their own estate plan on your assets if you don't have one. So if you do your own estate plan, have your own will, it really allows you to direct what happens when you die. Now everybody wants to be able to have that control to determine how their assets are divided. So let's talk about life insurance as a cornerstone of estate planning. Now, have been practicing. I started in 2008, so it's been a minute since I first started, and I've seen life insurance change the way that it's handled in the estate plan. And a lot of that has to do with taxes and what the tax law is doing, because life insurance that someone may have purchased in the 2000s, it might not be used for the same thing as it is now just because the laws have changed. So let's talk about how life insurance can be used in your estate plan. So some primary functions that I've seen life insurance be used for as part of an estate plan is that it does provide liquidity for the ability to pay debts, taxes, and expenses. Sometimes we also see it where somebody might be the primary breadwinner. Like, for example, my parents, when we were little, my dad worked, my mom stayed home with us. So one of the things that I know my dad looked at was, if something were to happen to him, how do I make sure the mortgage can be paid off? How do I make sure to supplement the income that would be missing if something happened to me? So we do see life insurance as a liquidity tool to help families as part of their estate plan. We also see where it protects dependents by replacing lost income. So again, if we have a single parent, or in the example of my parents when they were younger and we were children, it helps to provide that stream of income for a period of time when maybe there wouldn't be income because the primary breadwinner is no longer there. It also can equalize inheritance taxes and fund business succession. So when we talk to clients that have a business about a business succession plan or a buy-sell agreement, the question that we always have to answer is, how are we going to fund this, or how is this going to get paid? And life insurance is a great way to help fund that. Now, the importance of life insurance as part of your estate plan is that just like any aspect of your estate plan, without planning, your beneficiaries may have delays in the administrative process, and they might have financial burdens that maybe they didn't anticipate. So a tool like life insurance coming alongside your estate plan can help alleviate some of those concerns. There are some different types of life insurance, and so we get this question a lot, and this is where I always like to reach out to our financial advising friends because they know more of these details. But the main types of insurance are term life insurance, whole life insurance, universal life, and then final expense insurance. And this is really particularly specialized for end of life needs. You have to make sure you're choosing the right policy because each type is going to provide different things as part of your estate plan. It'll meet different financial goals. So you want to make sure that you're really exploring all of these options. So term life insurance is really thought of as temporary coverage. So the definition of a term life insurance policy, it provides coverage for a specified time. So it might be 10, 20, 30 years. There's no cash value accumulation, which means that premiums are typically lower than they would be if you had a permanent policy like a whole life policy. One of the features of a term life insurance policy is fixed premiums for the duration of the term. So that's a positive when you're trying to budget and allocate financially for what you can afford. It does have a fixed premium. It can be renewed or converted to a permanent life insurance policy, and you can typically do that depending on the policy without a medical exam. So sometimes people start out with a term policy, but as the term is ending or closing, they might look at converting that type of policy to a whole life policy. We see a lot of clients use term life insurance for short-term needs, such as covering a mortgage, protecting young children, in the example where one spouse stays at home to care for young children. Term life insurance might be part of the estate plan to just make sure that there's enough funds and money to support the family. It usually, we find, is for individuals seeking low cost protection because those premiums are fixed and typically they're lower than what you would have for a permanent policy. A lot of times folks that might not be able to afford a whole life policy can afford a term policy. It does have affordable premiums. It's typically easy to understand. Now, the downsides of a term policy is that there would be no payout if you outlive the policy term. Secondly, the premiums do increase significantly if you would convert it or maybe renew it after the term expires. And so as long as clients understand all of those aspects and features of a term policy and they're looking for providing short-term coverage or short-term funds as part of their estate plan, then usually we'll partner with a financial advisor who can advise them about term life insurance. A whole life insurance would be lifetime coverage throughout the owner's life, and typically there's a cash value that is tied to this type of policy. So a definition of a whole life is a permanent life insurance policy that lasts for the insured's lifetime. It accumulates cash value over time, which the owner can typically borrow from or withdraw that cash value. It typically has a fixed premium with a guaranteed death benefit. The cash value grows tax deferred, and dividends may be paid by the participating policies. So we see clients use this as part of their estate plan when they have long-term needs, such as legacy planning. So for example, when the federal estate tax exemption was lower, at one time it was only $1 million. And so we had some clients that looked at life insurance as a way to help pay any taxes when they died. So whether it be federal estate tax, inheritance tax, this type of whole life policy was allowing the beneficiaries to have funds to be able to pay. Now that would be important, especially where we are located around here, because we have a lot of farming families or business families that have a small business where they really don't want to have to liquidate those assets in order to pay the tax. So they look at other type of products in order to cover any tax. We also see a whole life used when individuals are seeking a stable, lifelong policy that has a savings component. And I will tell you that I actually, a couple of years ago, purchased a whole life policy, and I was looking at it from the perspective of I wanted to provide for my nieces and nephews when I passed away. And Pennsylvania has an inheritance tax if I would leave money to my nieces or nephews. So if I would do that, they'd pay a 15% tax to do that. Where if I bought a life insurance policy and designated them as the beneficiary on that policy, there's no tax, no inheritance tax on life insurance policies. So for me, it was a very strategic tool that I use as part of my estate plan because one of my goals was to provide for my nieces and nephews. And I can do that under the will, but they're going to have to pay 15%, or my executor would need to make sure to liquidate enough funds to pay for the tax. So I thought, well, as part of my estate plan, if my goal is to provide for my nieces and nephews, I could do that using a life insurance product. And again, life insurance is not subject to income tax or inheritance tax. So when we have clients that are concerned about those type of beneficiaries, sometimes we might look at insurance to help provide for those beneficiaries as part of the estate plan. It would be the same type of thing when we have clients that are charitably minded. We might recommend that they look at allocating retirement accounts to charities just because tax-wise that might be more advantageous than naming the charity under the will. So it's the same type of idea, just figuring out the best way to pass it on, the best way to structure your estate plan with minimizing taxes. Now, the pros of using a whole life policy is it is permanent protection with guaranteed benefits. It does have a cash value, and that cash value can serve as an emergency fund or supplement retirement. So if it's something where you're worried about having tax-free money in your retirement, you want to talk to your financial advisor about whether or not insurance would be a way to satisfy that. Now, the cons of a whole life policy: term policies, the premium is typically lower, so you're going to have a higher premium. You're also going to have lower returns on a whole life policy than you may have on other investment options. And that just depends on what's happening in the market, what's happening with interest rates. But typically, you're going to see less of a return on a life insurance policy. We have a universal life insurance. So this type of policy is flexible and has adjustable coverage. So the definition would be a universal life insurance policy is a permanent policy with flexible premiums and adjustable death benefits. The cash value does grow based on the current interest rates or investments. It does have flexibility to increase or decrease the premiums within the policy limits. Normally they'll say, it can't be more than this or less than this if you have a universal life insurance policy. And it does create options to increase or reduce the death benefit. Cash value may be tied to an index, or an investment. So that's where you're going to see some variable interest rates that might fluctuate. When you might want to use a universal life is individuals that have changing financial needs over time. Estate plans requiring both insurance protection and flexible financial options might look at a universal policy. Pros are the premium and the benefit are very flexible, which I'm a person that I like it guaranteed. So to me, that could also be a con, right? That your premium and benefit can be flexible. But we're going to look at it as a pro here. A potential for higher cash value growth than you might have with a whole life policy. The cons are it's a complex structure, it requires active management, and the cash value may fluctuate with market performance. So again, that's why it's important to partner with a financial advisor to make sure which product is really achieving your goals. Now, what I will tell you is the last two that we've talked about, the whole life and the universal life, from an estate planning perspective, whenever there's a cash value, we always like to make sure to tell our clients that a cash value would be available to the owner's creditor. So that would be any type of creditor, including long-term care costs. So if you have a life insurance policy that has a cash value and you would need long-term care, the facility can tap into the cash value amounts. With a term policy, there's no cash value, so they can't access those funds, the cash value funds. There's also a final expense life insurance, and this is really specialized end-of-life coverage. So the definition of this type of policy is a small whole life policy designed to cover end-of-life expenses. Typically covers funeral costs, medical bills, and small debts. Usually it's a low face amount, so it might have 10,000 or 50,000. Simplified underwriting because typically you don't have to have a medical exam. And the premiums are fixed for life. You might use this type of policy if individuals have limited savings for funeral or medical expenses, and those who want to leave a small guaranteed amount for loved ones to handle final costs, burial, all of that. The pros of this type of policy: easy approval process, and it's affordable for those that need basic coverage needs. Cons would be higher cost per dollar of coverage compared to maybe a larger policy, and it's limited to end of life expenses with no significant estate planning benefits. So again, if we have a client that's coming in and saying, I just really want to make sure that there are funds there to pay for funeral, then this might be the type of policy that we would advise them to talk to their advisor about. This is just a chart showing how the different type of life insurance policies compare. So we have term, whole life, universal life, and final expense there. So you're going to see the main difference is going to be the premiums, whether they're low, high, flexible, and the cash value. So again, term has no cash value. Final expense might have a cash value, but it'll be minimal. And then ideal for, we kind of outline what we've seen them most often used for in our client's estate plan. So let's cover some commonly asked questions. So things that we see clients ask us is, how much coverage do I need? How much life insurance, or how does life insurance minimize any estate tax burden? What happens if I outlive my term policy? How can I use my life insurance while I'm still alive? And how often should I review my life insurance policy? So a lot of these questions are ones that we would defer to a financial advisor just because we're focused on the estate planning aspect of it. So one of the things I can answer is, when we're talking about coverage, a lot of times it depends what the goal of the policy is. What is the purpose? What do you need it for? Because if you're using it to pay, for example, any taxes, then you really want to have your attorney calculate what would be the range, for example, of Pennsylvania inheritance tax that your estate plan would be subject to when you die. And if you can calculate what that range would be, then when you talk to your financial advisor, the financial advisor can recommend a coverage option for that. As far as life insurance minimizing the estate tax burden, that's a situation where if you have federal estate tax that applies, you're talking to about a 40% tax rate. And for inheritance tax, it can either be 4.5, 12%, or 15%. So life insurance for clients that don't want to have your executor liquidate assets to pay the tax, they can look at things like life insurance to help pay that tax so that the executor would have immediate access to funds to be able to pay the tax within the appropriate time frame. If you would outlive a term policy, unfortunately, the coverage would end at the end of the term unless you would choose to convert it. And again, that's one of the pros or cons, either way you want to look at it, of a term policy. For life insurance while you're still alive, you just have to remember the positive is that if it has a cash value, you can typically tap into that cash value. The downside is, from an estate planning perspective, so can a nursing home. So you just want to make sure you're thinking through that. And how often should you review your life insurance policy? I would tell you as often as you're reviewing your estate plan. And we always tell clients that you should review your estate plan either when there's a life circumstance change, somebody passes away, gets a diagnosis, gets married, has a child. All of those would be reasons that you would want to review your estate plan, which would include life insurance policies. But it could be if there's a law change, you would want to review it. So if the federal estate tax law changes, or if there's a new income tax law that comes in, you'd want to review your estate plan along with your insurance policy. And then otherwise, we tell clients that you typically want to do it every 2 to 5 years. Sometimes clients want to review more often. They might review yearly, but usually the 2 to 5 range, most clients feel comfortable with that, and that's what we'd recommend. So I always say, same time you're reviewing your estate plan, you want to review your life insurance. And the reason why is because so often we find they go hand in hand. Even if it's just because of beneficiary designations, you just want to make sure you're reviewing those designations the same time you're reviewing your estate plan. Here are some slides about the coverage. How much coverage do you need? It depends on expenses. The greater the income and expenses, the greater the insurance. You might calculate it by combining income replacement, all of that. And that's something that your financial advisor could go over. So I won't spend a whole lot of time about that. Let's talk about life insurance. I briefly spoke about minimizing the estate tax burden. One of the things I wanted to talk about here is that you can use a trust to own the life insurance policy. And the benefit of doing that is that I have a client that has a $2 million life insurance policy. And the problem is that even though he owns that life insurance policy, his children are the beneficiaries. So that money is not going to pay out until his death. But the IRS is going to say that the entire $2 million is included in his estate when we're determining the value of his federal estate, or when we're determining whether or not there would be tax that would apply. So an ILIT, that's an irrevocable life insurance trust. The benefit here would be if an ILIT or a life insurance trust owns the policy, then we don't have to include the death benefit in the value of the owner's estate. Because if my dad owns a $2 million policy and he has it in a trust, if he dies, we don't have to include that $2 million in his estate for federal estate tax purposes because the trust owned it. So we might have a client that has a large death benefit policy. We might recommend that the trust own it. That way, we don't have to worry about the tax inclusion, and it still would go out to the beneficiaries that you would name. So it still is going to get ultimately where you want it. It just allows it to be out of your taxable estate, which can be really good. Benefits of an irrevocable life insurance trust. So the death benefit that is on the policy, if it's owned in a life insurance trust, that death benefit is not included in your estate for tax purposes, which can be really helpful, especially in the example of my client that has a $2 million life insurance policy. Estate taxes are typically due after the second spouse's death, so that might be really helpful to have it owned in a trust, because then you don't have to include that value. It can reduce the size of your taxable estate, which means that it can minimize your estate tax liability. A 40% tax is what would apply if you had a federal estate over the exemption. So that 40% is huge. So if we can avoid that, that's always beneficial. It also can provide asset protection, because like we talked about with life insurance, if there's a cash value on that life insurance policy, then a nursing home as well as any other creditor can tap into the cash value. If it's owned in a trust, they can't tap into the cash value. So it does give you some asset protection. And then it does give you some control over the distribution. So if you have a $2 million life insurance policy paying to a child that might not be financially responsible, you can certainly appoint a trust and have that trustee pay out according to your specifications. It might be a certain amount a month, a certain amount a year, could be for certain lifetime milestones, getting married, buying a house, all of that. So it just allows you some control if you would want to do that. What happens if you outlive the policy? So if it's term, then you might be able to renew it or convert it if you wanted to. Otherwise, like we talked about, if a term policy is being used as part of the estate plan for just a short-term goal, it might not matter that you outlive the policy. How can I use life insurance while I'm still alive? So that cash value can be really important. So you can borrow against it. It gives you some flexibility with retirement planning, education, business expenses, all of that. Now, when you do borrow against it and use that cash value, it does reduce the death benefit. So I've had a couple of clients where they might have borrowed against a life insurance policy, and then they don't realize that when they die, it might impact their estate plan because that death benefit is reduced by the amount of the cash value. So if you're doing planning where maybe one beneficiary is getting the life insurance policy and another beneficiary is getting real estate, you just want to make sure you're thinking through, if I borrow against it, am I still getting the money in the appropriate amount to the beneficiary? The other thing I did want to talk about that is if you are going to have different beneficiaries, if you say I'm going to have one child be a beneficiary of my life insurance policy and the other is going to get the family family farm, you just want to make sure you're thinking through life insurance is not subject to inheritance tax. So if another child is getting real estate, you just want to make sure that you're thinking through, is there going to be Pennsylvania inheritance tax on that real estate? And if so, how is that beneficiary going to be paying for it? So you want to think through that. How often should I review my life insurance policy? We talked about this, just making sure it aligns with your goals. Now, sometimes a financial advisor might recommend a closer monitoring of a life insurance policy depending on what you're doing. But in our experience, all the financial advisors that we've worked with typically have a schedule in which they touch base with their clients. And we just encourage them to also include that as part of their estate planning review too, because of the beneficiaries and the fact that that passes through beneficiary designation and doesn't pass through your will. So it is part of your estate plan. Okay, so I know this was a shorter seminar than what we're used to, but I just wanted to give a crash course on life insurance policies as it connects with your estate plan and how we've seen it used for clients. So if you have further questions, you're always welcome to call our office, but we would typically partner with a financial advisor to figure out the best type of policy and how to do that. The other thing I've noticed is that sometimes we have clients that come in that have an old life insurance policy, and what we do there is we immediately get that information to a financial advisor, whether it be theirs or if they don't have an advisor, one that we're partnering with, to review the policy and make sure it makes sense for what the initial goal of the policy was. You are always welcome to reach out to our office at 717-655-2676 to schedule a consultation. And we do have virtual seminars. We're trying to do them once a month. So like I said, you can check out our YouTube channel for past seminars, and Amy will send emails about upcoming seminars. So this was Samantha Wolfe from the law offices of Samantha Wolfe, and today we were talking about life insurance in your estate plan. Thank you so much for joining us. I really appreciate